everyone, to another session of TriTech University. My name is Bill Steppen, and today our class is going to be going over how to pay vendors with credit cards, and we'll also take a look at how to handle those credit cards themselves. As always, during these sessions, if you have any questions at all, please go ahead and type them into the questions box that you have over on the side of the screen. I will be monitoring those as we progress, and I will do my best to answer them as I see them come in. We are going to be taking a look at essentially three processes today. We're going to take a look at how to prepay vendors with a credit card so that when you get the invoice in, you can basically mark it as having been paid. We'll take a look at how to pay a vendor with a credit card in a couple of different ways. And then we will take a look at how to, as I mentioned, handle that credit card payment as well so that the credit cards company themselves. So let's go ahead and get started. As usual, we are using my music system here for the purposes of the webinar. If you are not a music store, don't worry. We're talking about accounts payable today, and what's more universal than paying people, right? You got to owe someone money in some way, shape, or form. So until we all have Utopia and we all have, or those things from Star Trek, where you could just basically say tea Earl Grey hot, and it would pop out and it would just give you what you wanted. You could say, whatever you want to have. So anyway, without getting too far off tangent, let's take a look at how to prepay a vendor with a credit card. Now, when you prepay a vendor, basically what you're telling the system is that you have put some money onto a credit card, and you may not have even gotten that invoice yet to apply that payment against. So when you do that kind of a payment, we're not going to take a look at that from an AP perspective. We're going to do that from a ledger perspective. We're basically going to do what's called a check disbursement. Now, I've talked about this in the past. When we're doing check disbursements, we're not necessarily always paying with a check. We're basically just reporting some kind of payment out of some kind of account. And of course, this being general ledger, this is going to be needing to be applied or expensed against a ledger account as well. Now, we're going to take a look at some default accounts that you have in your AIM system. If you don't have these accounts, don't worry. You can easily create them. And this is where I'm going to go ahead and throw out my disclaimer, my usual disclaimer, that I am by no means a CPA. No one at TriTech is by any means a CPA. We just all stayed at Holiday Inn Expresses last night, and I can't even say that anymore. I'm in quarantine just like the rest of you. So when we're doing a prepayment, and we're doing this via a check disbursement, we are going to need to select an appropriate crediting account. And the one that we're going to use in this case is called Vendor Prepay Clearing. Now, this is a special account in the liability section of your chart of accounts. It basically means that you are owing somebody money, and we just don't necessarily know who we owe it to yet. We're going to go ahead and we're going to credit against this account. We can say that it's going to be an electronic funds transfer. We can give it any kind of reference that we want. I'm just hitting some random keys. The important thing when it comes to prepaying a vendor invoice in this fashion is the expense account that we are hitting. We're going to go down to the ledger field here, and we are going to expense this to what is called 201.99. Let me just go ahead and start typing that in so we can get right to it. And it will be called 201.99 COD/credit card prepay clearing. Now, this is a special account that the system looks at when we are doing things later on with putting in the AP invoice. Let's say that this is going to be, just to keep amounts nice and clean and simple, let's go and say it's $100. So up here back at the top, before I get too far away from that, in the payee field, let's say that this is going to be for Hal Leonard. And it's going to be for $100, and we're expensing that entire $100 to 201.99. So we're going to go ahead and add that. We've now expensed the full amount. We can go ahead and save that. So now that is saved as a prepay. Let me know if that made sense. We'll take a look at where this now shows up right now. So now, fast forward, and we get the invoice from Hal Leonard. We're going to go, and we're going to go to Accounts Payable and enter AP invoice. We're going to go ahead and select Hal Leonard from our listing. And what we're going to do is we're going to put in the normal AP invoice. Let's say it's invoice date today. That's the invoice number. The important thing here, when we're designating this as having been prepaid, we're going to put in the expense amount of 100, is when we get to this field right here, the COD/prepay field. Let me grab the highlighter just to bring extra attention to this. Basically, what we're going to do with that is we are going to click on that drop down, and we're going to see what we just did a few moments ago for that COD amount to apply of $100. You can see how when we apply this as a credit card/COD prepay, we're effectively paying off this entire invoice. So now we can go about with the rest of our normal process of expensing this. And just to keep things simple, I'm just going to say this was 100% inventory received, because this is not the focus of today's session. I did that webinar a couple of weeks ago. So now when we look at that AP invoice in vendor history, let's go ahead and take a look at vendor history now for Hal Leonard. And we're going to see that that invoice is actually paid off. We go to the invoices tab and there is nothing with a balance. If we look at paid invoices, there it is. And if we take a look at the payments tab for that invoice, it was basically already paid off. So that's basically all taken care of. As far as Hal Leonard is concerned, we already paid that. We paid them with a credit card. They have their money. The bookkeepers in the room, of which I hope most of you are, you're probably remembering I said that 201.99, well, both the 201.90 and the 201.99s are liability accounts. And so let's take a look at how this ledger looks today, right now. So I'm going to hop into reports and to to general ledger. Let's just take a look at this ledger by reference as I stab myself with my notepad here. We're just going to go ahead and throw this up onto the screen, and we're going to take a look at the entries so far of the day. So we're going to see that we did a balanced entry between 201.90 and 201.99. So we have the money effectively going into 201.90. Recall that liability accounts should have credit balances. So that has a credit balance. Now, the 201.99 effectively now has a debit balance. But that gets taken care of when we expense the invoice. So we can see now we've got 201.99 getting that money taken back, well, pulled back in technically since it's a credit. And we now have 201.98 with the actual, well, that was expensed. So remember, that would have been taken care of when we got the inventory. Again, I talked about that ad nauseum with other AP invoice webinars. So that would have already had a balance. So now the two accounts that have balances are really just the one account that has the balance so far now is vendor prepay clearing. And you're probably wondering, well, when does that get taken care of? And that gets taken care of when you get the credit card statement. So when you get the credit card statement, you're going to want to make sure that the credit card company themselves are set up as a vendor. What you may find handy to do, and I talked about this in the prior webinar as well, for vendor tips and tricks, is setting up a vendor default known as credit card. I've gone ahead and taken the liberty of setting one up for the purposes of this webinar. Ideally, you're going to have that pointing to the ledger account for 201.90. And I also created a ledger account here, 635-1 for bank interest or credit card interest. You can call it whatever you want. Just don't call it late for dinner. Again, I'm by no means an accountant. I've taken some accounting classes, so I have some idea on how the whole GAAP functions work. but I would definitely encourage you to speak with your bookkeeper or your CPA if you want to work on generating any ledger accounts in your system. So with this established, what I'm going to do is I'm going to go ahead and create a vendor for my credit card company. So we'll go into modules and AP and add or change vendor. And I may still have the vendors from before. I don't know if I reset the system or not yet. Looks like I do not. So let's go ahead and add one. Obviously, if you already have a vendor in your system for your credit card company, then you don't need to do this step. But for those of you who do, let's just go ahead and let's just say that this is American Express. And up in the short name here, I'm just going to put Amex, and we'll just save that. So basically now by giving them that credit card vendor default, when I go to do an AP invoice, the AP invoice entry is basically going to be that of the statement. So I go to enter AP invoice, I get the monthly statement, and it's going to have that $100 charge on there. So I'm going to go ahead and select American Express. And now I get the credit card statement. So it's as of today, statements that probably won't have a statement date or a statement number on them. I don't think they usually do. If they do, great. If not, I would usually say just go ahead and use the current date. So let's just say it's that. Terms are say 30. And we're going to put in the amount of the balance of the statement. Now, this is important. If this is your first one, this would typically be the balance of the statement. If you do not pay your credit card balance each month, when you get the next statement and you get to this expense field, you're not going to want to put in the balance of the statement. You would actually put in just the new charges, because in essence, if we think about this, if I don't pay off this AP invoice in full, let's say I only pay off $75 of it, I'd still have a $25 balance on this particular invoice. And then the next invoice would be, or the next statement, I should say, would be that $25 balance carried forward plus any new charges and any interest. So on this first one, let's just go ahead and get that. I'll go to the expense tab. And remember, I set up that credit card vendor default. So there's my 201.90. We're going to do that whole $100. There's no interest as of this month, so I'm not going to worry about charging any. Let's go ahead and save this now. And let's go back ahead and take a look again at our ledger report. So going back into this ledger by reference and today through today, and we'll run the report and throw it up to the screen. And so remember how I said that vendor prepaid clearing that we originally started with a couple minutes ago had the $100 credit balance, and now that has been reduced. So if we think about normal AP invoices, typically the accounts payable account is going to be the one with the open balance to pay. Now, when we keyed in the Hal Leonard invoice, we basically, that invoice was no longer open to pay, and we had offset by doing the credit card COD pay clearing. Normally, this would get the $100 credit to be paid, but because we marked that as prepaid, that got wiped out with that. Now, let me see if I can change. Can I change the highlighter color? I don't think I can. So let me just remove the drawing far and go back to the highlighter. So now the vendor prepaid clearing, which we originally put in when we said that the credit card was charged, is now finally cleared, and that is now being dumped into accounts payable so that we can finally actually pay someone some real money with a check or some kind of EFT transaction to, now in this case, American Express. So hopefully you're following the bouncing ball here. That would be how to do a prepayment. Let me go ahead and clear all of this out. Now, let's say that you already have an accounts payable invoice in the system, and I'm just going to go ahead and do one really quick here. Let's go ahead and just do one for Coast since they're right there at the top. Let's go ahead and do a different balance amount this time. Let's say that this one is, let's just say that this one's $200. And we'll just go ahead and expense this accordingly. So again, just to keep things simple, we'll say it's all inventory. And so now Coast has an open balance of $200. I want to put that on my credit card. So I'm going to go ahead. I'm going to go into Accounts Payable, and I'm going to go to Check Disbursements. But now instead of quote unquote saying that I had written a check out of my checking account, which is what it would normally want to default to, I'm going to use that same vendor prepay clearing. Essentially, the vendor prepay clearing is any and all charges or payments I'm making that are not coming from my checking account. If you're using more than one credit card, not a big deal. This vendor prepay clearing basically is the bucket under which all of those different credit card balances get dumped and then gets drawn from when you put the statement into the system. Much like the 20198 ledger account for inventory received pending invoice is for all inventory regardless of inventory type. It just all goes into that bucket for easy accounting. So we're going to go ahead and say that we paid the full balance of this with our credit card. So we're just going to go ahead and select that invoice. I'm just double clicking on it, going through the amount, saying that the check or EFT amount, let's just go ahead and say that that's an EFT. Again, if you get an actual reference number from your credit card, feel free to put that in. That will be probably more appropriate than just typing in some random numbers. But we're going to go ahead and save that. So now we've got a balance again back in that vendor prepay clearing. And now it's the next month and we get our credit card statement again. Let's assume that I didn't pay that off, which hopefully no one would ever do. Hopefully you're making at least some kind of credit card payment. Hopefully you're paying it off entirely each month. But if that's just not in the cards, let's say that I get my next invoice now from American Express. And there we go. And now let's say it's going to be for $210. So we got the next invoice date. Again, these are all going to be as of the same date just because. But now the expense amounts, recall, we still have the $100 balance that I did not pay from the previous statement. So I'm not going to put that as part of this expense. What I'm going to do is I'm going to look at the statement and I'm going to say, oh, there were new charges totaling $210, which was $200 that I used to pay Coast, and then let's say it's $10 in interest. So we'll just carry on like we normally do. We'll go to the expense tab. We're going to go ahead and select 20190. We're going to change that amount to be $200, and we're going to save that. We now have $10 left to expense. So we're going to go ahead and add another entry for the bank interest that I had set up, and we're going to save that. And of course, that wants a department here because I set this one up for department. So let's just say it's administration, and we'll save that. And so now when we look at American Express as a vendor, so we're going to go into vendor history, and let's pull up American. And we're going to see that we have a total balance now of $310. So that's made up of the two statements, the one from the original month of $100, then the next one with the new charges of $210. Recall that $200 of that was inventory purchases, and $10 was bank interest. And you can always right-click like I just did and look at the invoice expenses or the ledger expenses to see where all these monies are coming from. Now, of course, making a payment against that, you would just pay that like we've covered in other webinars. What I like about this process, me personally, Professor Tritech, what I like about this process and what your accountants might very much like is you are tracking these amounts with specific values and specific dates. So when you do this, you are basically telling that you're telling the system that the original vendors are paid. They are not expecting any more money, and now that amount is sitting in limbo, as it were. It's still technically underneath an accounts payable grouping on your balance sheet, but you don't necessarily owe it just yet because you haven't received the statement. And then when you receive the statement and you now are clearing out of that vendor prepay clearing, the vendor prepay clearing, and putting that again back into accounts payable appropriately, or accounts payable officially as the 201-1 ledger account. Now that is again an owed amount that has been invoiced. What I don't like about this process is looking at this vendor history from American Express. I really can't see what these purchases were. All I can see are the ledger accounts, the ledger amounts, which doesn't really tell me a whole heck of a lot. So I really like this. It can be a little tedious as far as doing all of the works and crunching the numbers and such. I'm going to show you an alternate way that was introduced to me by an accountant from an accounting firm. And there are some obvious benefits to it. There's also some things that I don't like about it. So I'm going to show this to you, and I'm going to show to you what I believe to be the fairest compromise between the two systems. Let's say that we do have a charge from a vendor. I'm going to go ahead and put in a new charge. So let's go ahead and say that this is Yamaha, just to pick someone. And oops, I'm still in vendor history. Let's go to enter AP invoice, and for Yamaha. And we're just to have an amount in here. Let's just say that it is $425. And we're going to just to keep this quick and simple, let's go ahead and put this into 201.98 for the full amount, and we will save that. So now we're going to tell the system that we paid the Yamaha balance with a credit card. What we're going to do, instead of doing what I just did a few moments ago, is I'm going to go into modules and accounts payable, and I'm going to go to a program called Transfer Invoice Vendor to Vendor. I'm going to go ahead and in this Transfer Invoice screen, click the vendor button here, and I'm going to go ahead and select Yamaha. I'm going to select the invoice that I paid with that card. So there's the $425 invoice. And you can see basically what it's now showing here is the vendor transferring from Yamaha for vendor invoice number 235 for $425. Now, where do I want to transfer that to? Well, I don't want to change the vendor. But what I do want to do is I want to change the payee. So I'm going to click the payee button here, and I'm going to go ahead and select American Express. So now I'm keeping Yamaha as the vendor. Before I hit save on this, I just want to show something really quick. So vendor history and Yamaha. So prior to the transfer, we're going to see here's the balance of $425 and balance of $425. I'm going to exit that. I'm going to save the transfer. So now that has been transferred. It's still the vendor is Yamaha, but now the payee who I owe the money to is now American Express. So now if we go back and look at vendor history, again, we're going to look at Yamaha. Now notice that that balance is gone. It's not there. I haven't paid it yet, but it's no longer as of Yamaha because according to Yamaha, again, I have paid that balance with my American Express as a method of payment. Now it will still show up over here in the invoices. See how it's showing up here? It has a balance. It's just not owed to Yamaha. And the reason for that is because the payee is now American Express. We can see that right here where it says vendor Yamaha, payee American Express. So if we go take a look at the American Express vendor history right now, American Express, we're going to see this total balance now of 735. So that was the original $100 invoice, the $210 invoice, those being statements, and now the $425 invoice. If I take a look at the invoices tab, there they all are. Now, what's really nice about this is it really lets us see where these charges are coming from. And I believe, obviously, that was a much easier process, too, as far as just transferring the payee from one to another, rather than having to finagle with going in and doing payments and all of that. Plus, I don't have to actually now, when I get the vendor statement, I don't actually have to key that in. What I don't like about this, though, is I'm now no longer really able to see what the due date is when American Express sends me the statement. As far as this system is concerned, this money was still owed on 6/20, which was the original due date from Yamaha. But if I sent this as of, let's say that I paid this as of that window of room between the end of the end of one statement and the beginning of another, if I paid that basically right after or whatever the math is, hopefully you know what I'm trying to say, where now I get the next statement from American Express, and let's say that this is now going to be due sometime in July, right? Because American Express says, okay, well, we now have this new charge. The due date on this next statement is July something. Well, these are still going to have the original due dates from when they were owed to the original vendor. So what can we do to kind of compromise this? Plus, what about any other interest charges? Well, if there's any other interest charges, you still need to key those in as AP invoices. You would just be only expensing the interest portion of the statement. As far as this, let's go ahead and assume that the statement date for the invoice that we paid Yamaha is going to be now due sometime in July as far as American Express is concerned. What we can do is we can go into Accounts Payable and Utilities, and we can go to Change AP Invoice. And what we can do in here is let's go ahead and select American Express. And here is the invoice originally from Yamaha. Now what we're going to do is we're going to go ahead and click up here into New Due Date, and we'll just go ahead and select a new due date sometime in July. Let's just say it's July 22nd. And then if we want to, we can go ahead and put in any notes or anything like that. We're just going to go ahead and save that. So now that is now going to show as due on 7/22. And technically, if we wanted to, we could go and we could do that kind of across the board for all open invoices as well, just so that we could basically see, when these amounts are considered due as far as American Express is concerned. So that is what I feel is kind of the best of both worlds. So you're not having to go in and do all of this legwork with the payments, even though that does give us the crispest control of where the money is at any given time as far as the books are concerned. It also gives us the benefit of now when we're looking at the vendor history and we're looking at also technically the payments of the vendor, even though most credit card companies, I know American Express actually does allow you to pay individual balances from their charges. Most of the time, though, you're just charging or you're paying a certain portion of the balance. So there is going to be that trade-off too. If you're only paying a certain portion, essentially what you'd be doing is you'd be paying off the oldest charges up to the newest in that respect. But that's kind of my personal take on the best way to handle credit cards in the AIM program. So hopefully that made sense. Again, there's the two procedures there with using that vendor prepay account and especially the vendor prepay clearing. If you are prepaying a vendor, you'll still want to do that because you'll want to actually go ahead and show that a charge is probably made on a certain day. And then ultimately, you'll just basically put that in when you get the invoice. So Hopefully that makes sense. Let me know if there's any questions. While I'm waiting to see if any questions come in, let's just go ahead and talk about the upcoming remaining month of May as far as the webinar account concerned. I'm just going to hop out to tritechretail.com, go into the member portal. Here in the member portal, we'll go ahead and click on sign up for webinars. We'll click on the free webinars link, and we just got the 2 in here for the rest of the month. So next Tuesday, we'll be looking at customer financing. Next Friday, we'll be taking a look at a deep dive into the lesson scheduler as far as invoices, how to best handle those, ways you can handle those, how to handle customer student makeups, and various other, I call them odds and ends, call them best practices, whatever you want to call them. Into tomorrow and early, next week, I am planning out the month of June's webinars, at least for the first couple of weeks. So stay tuned to this page and to our social media platforms on Facebook and Twitter, to your email inbox. I know our folks in the back are doing a great job at staying communicating with sending out updates to our calendar there. So if you've been receiving those emails, great. Keep an eye out for those. And again, if there's any webinars that we can do for you that you would like to suggest, drop me a line, send me an email to training@tritechretail.com. I'd love to hear from you. I'd love your feedback on how we're doing to help you through this crazy time. I know that most states, I believe, are reopening at this time, which is great. Hopefully you're all able to do it in a safe and productive manner so that you can help service your customers and keep them happy, keep the doors open for your business, and of course your employees, to keep them happy and healthy as well. And if there's anything else that we can do, just let us know. Appreciate your attendance and your and all of your patronage during this time as well. Linda has a question. Could we use the charge card statement to decipher which vendor payments we are covering without actually changing all the due dates of those vendors? Yes, technically you could. You don't necessarily have to change the due dates. I just like to do that just so that I can get a clearer picture of when those amounts are due. But when you go to do either a select invoices to pay or a check disbursements, either or for American Express, basically when it comes down to that, we're going to see what those invoices were underneath the account. Now, doing it the original way that I mentioned, where you're just doing the blanket statement entries, you get the statement and you key that in and you charge the whole amount to 201.90 and any interest to the interest account. If you're doing it the second way, where you're changing the statement or you're changing the payee, you'll basically see who the vendor was over here, Linda. Do you see that over here on the right? So if you're doing it that second process, which again, I really like because then I can see where the charge came from. So to answer your question, can you use the statements basically to decipher which vendor you're going to be covering? When you're doing check disbursements, you could basically just go right down this list and just select those specific invoices to pay. You don't have to necessarily change the due date. I just, like I said, like to do that just because that way I can see when that statement essentially was that it got onto and what that statement due date was. So hopefully that makes sense there, Linda. Let me know if it does not. I kind of start to feel like like John Madden going, the player's going to go this way and the defender's going to come this way. And okay, I'm going to stop now before I get too crazy, especially since I miss baseball. As I'm sure many of us have some kind of sport or entertainment that they miss. So, but yeah, hopefully that makes sense. If there's any other questions, let me know. I will hang out here for a few more minutes just to see if any other questions come in. And it looks to me like most folks are signing off. So let's go ahead and call today's session. So again, thank you so much for attending these sessions. I really appreciate your attentiveness and your questions. It's been a great series so far. We've got a lot of positive feedback from all these webinars we've been doing. We're going to keep on continuing to do them as long as you keep showing up and requesting them. So I hope you are able to make it a great day. I also hope that each and every one of you have a safe and reflective and above all rejuvenating Memorial Day holiday. I think we can all agree that a holiday is something that we could all use right now, just to have some break from it all. So again, thank you so much. I hope you're all doing great, and we'll see you next time.